So what we're going to do here in this video is we're going to actually back test together. I'm going to show you how I back test. And I feel like the purpose of back testing is essentially building muscle memory to learn how to think, right? And so what I mean by that is my hours of operation are from 5 to 7 Eastern Standard AM and 9 to 11. Those are the only time in the markets that I am looking to execute. That's not saying that I may be actually analyzing the markets outside of those trading periods, but I do not look to execute if it's not between 5 to 7 a.m. or 9 to 11. Essentially, what I'm picking is the first 2 hours of the last 4 hour cycle of London and the first 2 hours of the first 4 hour cycle of New York. Those are the only two. That's the only 4 hours in a trading day that I'm looking to execute, right? So what I do in back testing is that I take the markets up to the point at 5 a.m. in the morning, right? And I ask myself, okay, if this was actually a live trading day, what would I be thinking at this time in the market, right? What narratives would I be drawing, right? What would be my direction at this time in the market, right? Now, this was actually a trade that I did execute, but we'll get to that later. So for me, if I just take a step back, right, Monday. So this was a Tuesday, and Monday just basically just traded bearish all single day long. This price range here for me was very inefficient. So for me, I at first at the start before any of this was printed, right? The very first thing I had in mind was, I'm just gonna continue selling, and I want to target these lows, right? First thing I had in mind. None of this is printed. Cool. Go to sleep. Wake up. Wake up around about 4:30, get in the markets 5 a.m. This is what I see, right? So how was I thinking at this time? Now, this in particular is one of my favorite daily cycles to trade, right? And what I mean by that is, for one, the very first thing that I woke up and I seen in the market was that I acknowledged this daily wick here. Right now, if you don't know anything about a daily wick, is that price tends to follow the wick. So for me, that was an indication of price going higher. Now that's not to say that sales were out the picture at this time yet, but that was just one of the things that I like to see. Right now, another thing that I took note of is that I acknowledged the 4 hour closer from 1 a.m. in the morning to 5 a.m. Right. And I acknowledge that the body of this 4 hour candle was here. Right. And that the only CLT protecting the body of this 4 hour candle was this previous H1 high. If I mark out from 4 to 5, so if I put 4 o'clock on here, right here, so the only catalyst, the only constant liquidity target in the market protecting the body, let me put my magnet back on. The only CLT protecting the body of this daily candle here was this previous H1H. Now, so if I were to be anticipating this high right here to maintain, then what I did not want to happen was for price to come and liquidate these two lows, right? Because at the start of 5 a.m., this right here now became the previous H4 low. Right. This is without nothing over there. This is just me painting a picture for what I was seeing. Right. This right here now became the previous H1 low. Right. So how am I thinking right now? I'm thinking, well, okay, if 5 o'clock comes in and we liquidate both of these previous H4 lows. So if we liquidate both of these two constant liquidity targets, per my rule, is that I cannot buy or sell the most recent CLT that went and swept buy or sell side liquidity. So for example, since this right here would be the most recent constant liquidity target that went and swept major sell side liquidity here, per my rules, I cannot sell anything here because per my rules, this is now first target for a buy. So with that being said, for me, at this time in the, well, not at this time because it hadn't swept it yet, right? But that was just the narrative that I was drawing. Okay, so basically, how I'm approaching 5 is to say, okay, now I know exactly what I'm gonna do with this. If these lows maintain, if these two lows maintain, I'll sell this last point of supply here, but then price to go lower. Okay. However, if 5 o'clock comes in here and we liquidate these two lows, I'm going to look to buy. And this will be my TP1. But for me, not really TP1. This would just be the point in the market at which I would go break even, per se. Right? Because at this point, this would just be an automatic upside target for me, just expecting bullish PA. So for here, if I go down to the 1 minute, right? So it's 5 o'clock. I'm in no rush. Market opens up. 5 o'clock candles opens up. We trade up, right? Doing this thing. Boom. At this point in the market, now we have liquidated the two CLTs here, right? So now sales are completely out the window for me right now, right? Meaning that if I didn't catch a buy here and price does come back up to here, per my rules, I just can't sell this, right? And that's just per my rules. The most recent CLT that just swept major buyer sell side liquidity, I cannot buy or sell that, right? And what I mean is buy or sell some supply or demand zone. In this case, this would be supply zone before the CLT, and then set a stop loss here, right? So we've liquidated both of these lows, right? So now I want to see some form of shift, or at this point here, I'm just looking for optimism. I'm just looking for an excuse to buy, right? Now, one thing I do notice is that I'm big on acknowledging time. So one thing that I take into consideration here is that I love the fact that we had swept, that price sweeps, liquidates both of these lows in the last 30 minutes. So from 5 to 6, in the last 30 minutes of this first hour of this complete 4-hour cycle, right? But of this first hour here, in the last 30 minutes of this first hour, price has liquidated both of these CLTs. Right now, at this time in the market, we're approaching the last 15 minutes of this hour cycle, right? So if you view an hour cycle like a daily cycle and think of it from a perspective as that, if this is the last 15 minutes of this hour cycle, think about knowing how to think, right? You build the muscle memory. If this is the last 15 minutes of this hour cycle and price has just liquidated these lows, this would be the perfect time for price to then trade higher because, for one, it fits the narrative of closing the hourly candle, right? So let's see what price does. So price does give some slight push up, not nothing too spectacular, right? Nothing too spectacular at all. And then this hourly candle close, right? Now keep in mind is that what I like to see here is acknowledge this here. Now at this time in the market, I was not anticipating the next hour to even come in here and sweep here, right? I'm just looking for an excuse to buy. Like I need some break of a structure here, for the market to give me something. Now, one thing that I did like when I was looking at this live was that I did like that price started just kind of sitting here pausing. I love when I seen that this next hour came in and swept, this previous H1 low. Right. To me, that was just very fractal. It was like the same fractal play as, price coming in, sweeping the H4 low. Then we go from hour to hour cycle. We sweep the previous H4 low. Right. For me, I executed this. To me was a break. And put my stop here. And price went off to the races. Now what I liked here is that at first TP, stop, stop, stop. This here was your better. This here was the best entry, right? To me, because the 3 minute, there was a 3 minute demand zone here where this was extremely clean. However, I would have missed this. I wouldn't have took this trade just because it's outside of my trading hours. Um, and I'm just really big on rules. But what I did do is I actually did take this trade here. I actually did take this trade here. And my TP was this daily candle open, right? And the only reason I took this trade was because at this time in the market was that um for me, I felt like this was just too early for price to go here, like just yet. Because it's like when you think about time in the market, it's like everything can't happen at once. Like the market's got to create highs and lows. It's got to go up, down. It's got to create cycles, 4 hour cycles, daily cycles. If price comes and it's like if this is the intention, um, if this is the intention of, well, I don't really want to say the intention of the day, but just for the sake of this video, right? Just say this right here was the intention of the day, right? For New York and London, this was just the main intention for price to come and get this. If this is your main liquidity target for the day or price in general, right? Uh, if if price comes here at this point in the market, what's the rest of the day gonna do? Like, and I guess as cliche as that sound, like as cliche as that question is to ask, what's the rest of the day gonna do? Because I guess someone could just be like, well, I mean, it could consolidate, and I mean, yeah, of course it could, but what's the rest of the day gonna do? Like, because there's still volume that's got to come in during New York. So it's just after seeing, trading the markets for some time, you realize that, every not everything happens at once. And I think a better way to describe that is patience. It's like re-engineering patience. From a standpoint is like, when I used to get in every single trade, as soon as I enter, I would want it to be TPing within the first 15 minutes. Like if it's not going to my take profit, every single pullback here would scare me. It's like, oh gosh, it's pulling back on me. Right. Then I'm in this trade down here. I might would close it or something. But when you understand that everything, the market takes time, everything is not supposed to happen at once. It's supposed to create highs and lows. Every 4 hour cycle moves like a daily cycle, like a 1 hour cycle. It's got to create a high, it's got to create a low, it's got to expand, it's got to pull back and breathe. So for me, this sale here was just literally off of the supply zone here. primarily because we had swept um this liquidity here, right? If you think about it from a smart money concept, there was probably like a lot of traders trying to sell this here, which I love. I love when price is coming into demand zones and I get reactions like these. Because if you ever notice, a lot of times reactions like these typically, in this case it didn't, but they sometimes create a higher low and then price just goes higher, right? So I love that. When I seen that reaction there, it's to me it's more confluence for price then to go higher. Um, because then I know there's selling pressure here. Like there's actually liquidity here. Like a reason. Price has a reason to actually go there. So, but to wrap this up, that is how I back test. My hours operational from 5 to 7, and of course 9 to 11. So I go to those times in the markets and I ask myself, okay, what am I thinking at this time? You know, how would I be analyzing price? You know, what is price telling me? And then build a narrative. You know, if this, then that. And sometimes when I get back here and back test, I'll come to like 5 o'clock in the day, like 5 a.m. and I won't have nothing. You know, like I would literally look at the computer and be like, I don't really see nothing. Like for example, here, this was a Monday. If I was back testing this day right here and I came here at 5, seeing this drop here, there would have been nothing. There wouldn't have really been much of a narrative for me to draw here, right? All right, so if I zoom this into the 5 minute, this would have literally been all that I would have seen. And if I put CLTs here, this would have been something that I would have marked is that this low here was this current daily low. This previous H4 low did not run this. This would have just been an automatic target for me. Um, One thing that I would have pointed out in this case here is something that I would have had like to see is that there was a lot of wick here. So it priced nothing like this previous H4H was really like the only CLT protecting it. So if this here did maintain and price were to trade back in here, maybe to fill this wick some, price mate would spend a little bit of time here. But for me, and if that's were the case, this would be something I would love for this here to maintain, and a narrative that I would draw in this case here would be here. I would want this supply zone here. So that would be what I would draw for 5. If price comes back in this supply zone because this is still maintaining, first of all, I remember this Monday. This was following like this crazy news drop. So, and there was the previous monthly low was right over here somewhere, not too far off. So that would have been my next break even here, TP1 at that previous monthly low. That would have been something that I would have wanted to see, right? But then as soon as 5 o'clock opened, like I remember this, and it was just boom. It was just straight there. So at that point, I didn't take any trades Monday here. I did not take any trades Monday because at this point, to me, I feel like the move is gone. Yeah, there was like some small pullbacks here, but my uh my trading and that's when it's knowing your strengths, your weaknesses, and also knowing your trading plan, right? My trading plan is uh is watching is acknowledging inefficiency as price goes and sweeps constant liquidity targets in correlation to time, the anatomy of candles, right? So at this time here, um there was nothing, there were no CLTs for me to, manage price after, things of that nature. It was just price was going. I figured it would just continue lower. Um if you want the sauce, if you want to sauce something up in here as far as like a sweep, a breaker structure, a pullback. I mean, of course, by all means, there's definitely something feasible. There's definitely something feasible in here that you can uh put together, right? But my thing is, this is not a strong point for me live. Like catching continuations like this. So I don't, when I'm back testing, I don't even try and get right here and say, oh yeah, price. I don't get right here and draw stuff like this. Yeah, price sweep, breaker structure. Yeah, we come back in the supply zone. Oh yeah, we sweat period. Yeah, I could have got here. Because it's just like, nah, it's not gonna go like that when I'm live. I'm not even gonna be thinking, it ain't even gonna be nothing I want to get into, right? So this would just be a day where it's like, okay, I went back to our back test that day. The narrative I came up with, it didn't happen. So that would have been a day I would have traded, right? And over time, you build that muscle memory. That's a part of muscle memory too, is recognizing a day where you don't trade. Um, so this was, to me, this example right here was actually more dope than the example that I showed that traded, because it showed that this was a day where, I actually drew a narrative. Price didn't do completely nothing of what I drew, so it just wouldn't have been a trading day, right? That's a key part of being a consistent, profitable trader, is knowing your plan, knowing when to trade, seeing things you like. If it's a trade that I know I'm gonna have to execute, and just kind of be on pins and needles, like, oh shit, just some of those emotions that I know certain trades, certain behaviors, certain price behaviors trigger certain emotions in me as a trader. So I just completely avoid them. And this is one of those setups where, yeah, of course, hindsight, oh, this is beautiful. But in live, this wouldn't have been nothing that I would have even been trying to process at all. And I'm completely okay with that, because when the play comes that I could process, it was beautiful, right? And one or two of those a week, and you're golden. One to two, three, however many you get a week. Don't even try and put no numbers on that, but you're golden. So yeah, I'm gonna wrap this up.